The markets are closed, but the business stories are just heating up. Hello, I'm Mai Rodriguez. Catch up with us on Business Brief. Asian shares are mixed in a cautious trading Friday after Wall Street closed at an all-time high. This comes as Delta Airlines kicked off earnings season with a solid outlook for the second half of the year. Japan's Nikkei 225 and Australia's ASX 200 are flat, while South Korea's Kospi and India's Sensex are in negative territory. Hong Kong's Hang Seng, Singapore's Straits Times, and China's Shanghai Composite, meanwhile, are in positive territory. In the currency markets, the US dollar appreciates against the Japanese yen, the Singapore dollar and South Korean won, but it depreciates against the Thai baht, and it's flat against the Hong Kong dollar. The Australian dollar, meanwhile, depreciates against the greenback. In commodities and crypto, gold prices are up, but by 0.7%, and oil prices or oil markets are trading mixed. In the cryptocurrency space, Bitcoin climbs over 4%, boosted by strong institutional demand and pro-crypto policies under the Trump administration, while Ethereum surges by more than 7%. The U.S. is moving forward with a staggering 20% tariff on Philippine exports, and the government is trying to put a positive spin on it. But with sectoral exemptions in play and industry leaders sounding the alarm, how will this impact the country's global competitiveness? Sujin Kim reports.
The palace has expressed concern, but it appears focused on the positive side of the 20% tariffs the U.S. has imposed on the country, set to take effect next month.
We are concerned that the U.S. has decided to impose a 20% tariff on Philippine exports. The fact remains, however, that the 20% rate is the second lowest among all reciprocal tariffs that the U.S. has imposed on the region, the lowest being the 10% of Singapore.
The economic team clarifies that the country's main export, semiconductors, is exempt from the tariff.
America has sector-specific tariffs and sector-specific exemptions. So it has nothing to do with us. So the semiconductors that I'm talking about that are exempted is not because of us. It's because America chose to exempt certain semiconductor sectors because they deemed it important to their, for example, supply chain, or deemed it important to their national security. So they exempted certain semiconductor categories. And fortunately, swerte tayo that a lot of those that they exempted are actually our semiconductor exports to the United States. So the rest of the products are subject to the tariff.
Despite this, it's clear that many other products will be hit by the additional tax, including agricultural exports, industrial goods, and consumer products not on the exemption list. A Philippine delegation is set to fly to Washington next week for face-to-face negotiations.
So myself, together with DTI Secretary Chris Roque and Undersecretary Perry Rodolfo and Undersecretary Alan Hepty, will be flying to the United States next week. This is actually a scheduled trip to the United States even before today's announcement, no?
However, experts and trade advocates do not share the government's calm outlook. Filomena Santa Ana, executive director of the advocacy group Economic Action Reform, slammed the tariffs as arbitrary and an assault on the rules-based global trading system. He warned that the adverse effect on the Philippines' electrical and electronic exports will be immediate. Another coalition, Trade Justice Pilipinas, called the 20% tariff a blatant weaponization of trade policy, an act of economic strong-arming. Even the country's largest business group, the Philippine Chamber of Commerce and Industry, was stunned by Trump's announcement.
So this news is really, we are taken aback and we are totally unprepared for this. If you remember, 2 months ago, an economic team led by no less than Secretary Go and Secretary Roque went to Washington, D.C. to negotiate for more favorable terms on this tariff. They came home bearing good news.
Trade VP Brian Ang said the decision came at a time when local exporters were already struggling to compete.
From the beginning, our local exporters have never had good business, especially exporting to the U.S. Gone are the days when our furniture from Cebu and the garments were all made in the Philippines. Today, all U.S. garment and furniture, if you can see, made in Honduras, made in Peru, made in even Bangladesh. So our competitiveness is at its lowest. So this kind of news will definitely not help and just aggravate the issue.
He warned it puts the country at a clear disadvantage against neighboring economies.
Even today, we will immediately feel it because we are already not competitive. There is really no hope for our local exporters to sell to the United States with this add-on tariff. You have to look at the other countries. We were increased from 17 to 20% tariff, but there are other countries who received a reduction in tariff. Moldova, Sri Lanka, even Iraq received a 9% reduction. So it just shows we are not a favored partner.
For Ang, the issue goes beyond tariff numbers. He argues that structural gaps like the lack of local subsidies and policy support make the Philippines a less attractive destination for global manufacturers.
You compete with Vietnam, Cambodia, diba?
Yes,
From
sir.
17 to 20. When Vietnam has been giving all their local manufacturers subsidy on fuel, electricity, income tax holiday. Philippines has not done that. We cannot afford to give all this subsidy. So to begin with, we are already so many steps behind. This tariff is just one component, and it doesn't help that from 17 we were increased to 20. The hope kasi is for all these manufacturers in China to relocate to us. But with this tariff, why would they? They would rather go to Vietnam, Cambodia, etc., even Sri Lanka.
And given the uncertainty surrounding the U.S. market, Ang urges a refocus towards other regions.
I would look at other countries, diba? What if you sell to China, diba? Yes, politically, we are not the best of friends, but commercially, there is so much opportunity there. So we can explore that.
Finally, on Trump's vote to have Philippine manufacturers relocate to the U.S., Ang says,
In the first place, how many manufacturers do you have? Diba? Manufacturing is not a growing sector in the Philippines. Number two, U.S. is not cheap labor in the U.S. It's even harder to train American than to train our local workforce. If you relocate just for U.S. market, you have to do your analysis. Is it worthwhile? You will be so much further naman from Asia. The logistic cost of relocating is also there.
He pointed out that the upcoming ASEAN summits to be hosted by the Philippines next year could be timely venues to reopen trade talks and push for more balanced terms. Sujin Kim, Bilyonaryo News Channel.
The first bilateral meeting between President Bongbong Marcos and his U.S. counterpart Donald Trump happening this month. The White House says Mr. Trump will meet Mr. Marcos in Washington on July 22. It is expected that China's bullying in the West Philippine Sea will be tackled. Foreign Affairs Chief Teresa Lazaro said Trump's 20% tariffs on Philippine products will also be discussed.
The issue of tariffs is an issue that will be discussed among others. So because it's also very important to us, we have already sent negotiators to discuss this issue in just a month ago.
President Trump on Thursday announced a 35% tariff on imports from Canada starting August 1st. Trump posted on social media his letter addressed to Canadian Prime Minister Mark Carney, where he criticized Canada for retaliating against previous U.S. tariffs. He pointed out that the new tariff is in part caused by the flow of fentanyl from Canada. He also cites the allegedly unfair trade practices of its neighbor. The Trump administration had previously imposed a 25% tariff on Canadian goods. It later exempted products covered under the U.S.-Canada-Mexico trade deal. Vietnam hails as a breakthrough a long-awaited trade deal with the U.S. Vietnam's foreign ministry spokesperson said their negotiators are finalizing the terms with their U.S. counterparts. Last week, President Trump said Vietnamese goods would face a 20% tariff and transshipments from third countries through Vietnam will face a 40% levy. The United States is Vietnam's largest export market.
The two country leaders spoke on bilateral relationships, including trade reciprocal during the phone exchange. General Secretary to Lam highly values President Donald Trump's attention to Vietnam and to the bilateral relationship.
A 50% U.S. tariff on copper imports could shake up global trade, and Philippine producers are gearing up for the stiff competition. The Chamber of Mines says local producers may scout for new markets and invest more in value-adding facilities. Copper is crucial for electric vehicles, semiconductors, and defense systems. President Donald Trump says the increased tariffs will reassert U.S. dominance in the copper industry. The Philippines exports modest volumes of the metal to the U.S., but miners are bracing for the ripple effect. It's necessary to regulate online gambling. That's according to Manny Ocampo, President and COO of the Investment and Capital Corporation of the Philippines. In an interview on BNC's Business 360, Ocampo stressed the importance of protecting minors from accessing online gambling platforms.
We also think that there should be safety nets, or what we call pause buttons, so that players just don't keep doubling up on each bet, and at the end of the day maybe losing tons of money. We know that most of the online gaming sites probably have beefed up their security protocols and all, but again, safety nets or security against breaches, internet scams, and the like, identity breach.
But Ocampo says banning online gaming altogether would only drive players to other possibly unregulated options.
I think if we do it correctly, we should be all right in providing online gaming as a way of entertainment or as a way of gaming. But it has to be regulated. I think maybe the initial part was that it made it too easy to get on the online gaming platforms. So that's something we'll have to restudy, Robert.
Online gambling firms have until August 15 to take down billboards and other out-of-home advertising materials. The Philippine Amusement and Gaming Corporation gave the order Thursday over growing concerns on e-gambling's impact on addiction and debt, especially among low-income users. PAGCOR and the Ad Standards Council will sign an agreement on July 16 that will pave the way for broader rules covering TV and outdoor gambling ads. We're taking a short break. More business stories are coming up next. You're watching Business Week. More strain on consumers' monthly budget as Meralco raises power rates this July, owing to several factors. Sujin Kim has the details. Go ahead, Sujin.
Yes, Mai, the Manila Electric Company announced a power rate increase of 49 centavos per kilowatt hour for July, effectively reversing 2 consecutive months of rate reductions that totaled 85 centavos per kilowatt hour. For residential customers consuming 200 kilowatt hours per month, the adjustment will result in an additional 98 pesos in their bill. The main driver behind this month's rate hike is the higher generation charge, which increased by 34 centavos, with charges from power supply agreements and independent power producers seeing an uptick. Meralco attributed this surge to higher world fuel prices amid the Israel-Iran conflict, along with the continued depreciation of the Philippine peso. The peso's depreciation, falling to its lowest level since March 2025, further exacerbated cost pressures, especially since 58% of PSEi costs and 99% of IPP costs are denominated in US dollars. Meanwhile, partially offsetting the increase was a reduction in charges from the wholesale electricity spot market. Meralco reported that the Luzon grid experienced improved supply conditions in June due to a drop of over 770 megawatts in average demand, although transmission charges still contributed to the overall increase. Meralco clarified that generation and transmission charges are pass-through costs paid to power suppliers and the grid operator. As the rainy season begins, Meralco issued a public safety reminder urging customers to switch off the main power breaker during floods, ensure appliances are dry before use, and have water-exposed devices checked by licensed electricians. And those are latest updates from Pasig City. Back to you, Mai.
Thank you for that report, Sujin Kim. Digiplus, led by Bilyonaryo Willie O'Shea, spent 120 million pesos Thursday in its first move under a 6 billion peso buyback plan. Digiplus shares fell 36 pesos from a record high 65 pesos and 30 centavos in under a month due to a severe sell-off after criticism of online gaming intensified. The company's first move is to repurchase 3 million shares at prices between 37.20 and 40 pesos apiece. Digiplus still has 5.88 billion pesos in its buyback fund to help restore investor confidence. Motorists better gas up now as oil prices are expected to rise following 2 consecutive weeks of rollbacks. Based on a 4-day trading, the cost of diesel may increase by up to 1 peso and 50 centavos per liter next week. Gasoline could go up by 60 to 80 centavos per liter. The expected hike is driven by strong fuel demand, which has outweighed the effects of increased supply. Fuel retailers say renewed Houthi attacks in the Red Sea and concerns over potential impacts from new U.S. tariffs are also contributing to the upward pressure on oil prices. And before we go, a record-shattering sale for a handbag, not just a regular handbag, of course, but a true piece of fashion history. The original Hermes Birkin was sold in Paris for a jaw-dropping $10 million. That makes it the most expensive fashion accessory sold at auction in Europe. A collector from Japan bested 9 others to make the winning bid. The coveted item was worn and created specifically for singer-actress Jane Birkin in 1985. It was bought by a private French collector in 1994.
We do many things together, but now it's time to say goodbye. I don't know if it's so much money, you know, in the world, too much thing, too much money, but for the Birkin bag, it's the price is the price of the Hermes story, the price is the price of the handmade, you know, for the bag. So I think it's a good price for a Birkin bag, the first one, the prototype one.
The collector bought it over 3 decades ago for about 250,000 euros. Philippine shares barely move in the final trading day of the week. The PSEi index ended flat with a downward bias to close at 64.59, finishing the day as the 6th worst performer in Asia. The sectoral indices ended in mixed territory, with property falling the most at nearly 0.8%. Advancers outpaced decliners 100 to 81. Total value turnover reached 9.4 billion pesos. Week on week, the PSEi rose by 1%. Majority of the day's most active stocks ended in the red, with Digiplus falling the most at more than 4%. Meanwhile, at the foreign exchange market, the peso is currently trading at 56.48 against a greenback, depreciating from the previous close of 56.47. And that's a wrap for today's Business Brief. I'm Mai Rodriguez. Join us again next week as we bring you the stories that help you plan your next big, bold moves in business. Only here on the Bilyonaryo News Channel. See you then.